Now, ahead of that, we're getting some news about the U.S. economy. The economy rebounded at a 3% pace between April and June after the trade war tensions wiped out growth during the first quarter. That's the GDP data that we're getting this morning. And we're also overall looking at some news around the inflation story. We want to get some more perspective from Paul Dietrich, who is Chief Investment Strategist at Wedbush Wealth Management. Paul, obviously we've got, and Bruce Murray's still with us, obviously we've got a Fed decision to make today. The Jay Powell and co. will be making that decision later today, that the U.S. economy grew more than expected during the second quarter. What do you think that says about how they'll be thinking about their messaging to Wall Street?
Well, I think they understand, and investors ought to understand that the tariff situation here in the United States has completely distorted GDP last quarter and this quarter. Last quarter, it was because people were front-running the tariffs and imports were coming in, and so we had the negative GDP. This quarter, everyone knows that these tariffs are coming and that prices are going up. So big-ticket items like cars, washers, dryers, home improvement, construction equipment, everybody's trying to buy that before it goes up 15 or 20% with the tariffs. And so that has distorted these numbers. And the one thing, the question that no one really can answer, including the economists at the Federal Reserve, and I talk to some of them fairly frequently, is how are these tariffs going to affect going into the future? I mean, are people who are going to buy things over the next 12 months, they front-loaded them for this quarter, are we going to see a drop in sales? What about wholesale sales? What about earnings? What about supply chain issues? All of these things no one knows. And if an economist or an analyst tells you that they do know anything other than prices are going up in the United States, they're just guessing.
So, Paul, could you talk to us about as you see the artificial intelligence rolling through the economy, that's going to be highly productive to offset some of the costs that you pointed out are going to rise just from physical commodities. But it seems to me that, yes, this could be a short-term blip, 1 or 2 quarters while the tariffs get into the economy. But beyond that, we could have a decent run. We might have a couple of sloppy quarters, as you point out, as people withhold or buy things in advance and hold off. But 3 quarters from now, they'll be used to that and moving forward. Yeah.
Yeah, I have. I mean, in terms of AI, I'm as bullish on AI as I was back in 2001 on the internet. But we still had a recession in 2001 and 2002. And even some of the most profitable companies like Apple, Microsoft, Amazon, IBM, Cisco, they went down dramatically during that period, even though the internet has completely changed all of our lives. And AI is going to do the same. The problem is that other than the people who are selling chips, you're not really seeing huge earnings outside of the infrastructure, which, as most people who follow AI know, will eventually become commoditized. The large language models, the ChatGPTs, things like that, just as the internet itself and providing internet services became commoditized. Mm-hmm. As Warren Buffett used to say, he didn't want to invest in technology. He wanted to invest in the companies that were using technology to make a lot of money. And that's going to be the case with AI in the future. But the problem that we have in the short term, and I believe it's probably going to be longer than just a couple of quarters, is that if you think that people were angry at President Biden when for a few months we had 9% inflation, wait till the tariffs start hitting. And most people are saying, well, we haven't seen any inflation or it hasn't been so bad. Well, the reason it hasn't been so bad is that they really haven't been collecting it. We've had a pause until, August 1st. Hopefully that's a set date and they don't push it off any further. But most of the tariffs are not being collected at this point. Once they are collected, according to the Yale Econ Lab, we're going to see an effective tax rate of about 18-19% for tariffs in the United States. And as I said, people, I think one of the reasons President Trump won was because people were so upset with rising prices during that inflationary period a couple of years ago. And just wait until they start seeing price hikes of 18-20% over what they paid last year during the Christmas season. It's going to be brutal. And then, and economists disagree on this. Some economists say that, it'll just be one-time 18-20% increase in everything we buy at Costco or Walmart or Target. But what happens is if you buy a truck and you have to pay 18-20% or 25% more for that truck, and you use that truck for your business, you've got to increase, your costs for delivering stuff or construction or whatever it is. And as you increase that cost to get back the money that you paid extra for that truck, we call that inflation.